Me?
Yes, I can hear you. Can you hear me?
Yes, perfect. All right.
Awesome. So hopefully the internet connection is good. I know there was an issue with it before. Yeah, so we kind of came together today to answer some of the most asked questions in the current market. This is kind of like more of a Q&A style Zoom, kind of like where anybody that has questions about the market, a general home buying question, investing questions, anything that anybody wants to ask, you're more than welcome to raise your hand and ask your questions. I guess I'm going to let Kyla take away and tell us a little bit about what she sees right now in the market, what's going on with interest rates, what's going on, how she feels the climate is in the market right now.
Yes. Hi, guys. So, as we know, we've been in kind of a volatile market for like the past, I don't know, 3 years. But I always say, you have to conform to whatever market you're in. I feel as though it's always a time to buy. I say it over and over again. Buying is obviously better than renting. When you're renting 100% interest. So, of course, why wouldn't you be paying into your own property? The market right now is interesting. It kind of came to like a gridlock where property values shot up, right? Because interest rates were so low. And then interest rates rose, and it's kind of slow down buyers a bit. The average buyer, sometimes payments with the values that we have now, it's just not affordable for everyone. However, there are people still buying. There is a lack of inventory still. So people are out there, people are purchasing. Rates have recently gone up. So they're in the 6% range about now for primary home buyers. And even for primary home refinancing. Interest rates on investment properties are obviously higher than when purchasing a primary home. They're usually 1.5% to 2% higher than what the par rate is when purchasing a primary home. However, we do expect rates to go down. We expect them to go down over the next, 6 to 12 months. The Fed's definitely going to drop them. They have to, with the prices of home values staying where they're at, which I predicted. People like, oh, the market's going to crash, property value is going to drop. There's no reason for them to drop. Everybody's in fixed rate loans. People can afford their homes. There's no reason for property values to decline. In the past, when property values did decline, when we go back to 2008, that everybody loves to compare now to, which it's nothing like, property values declined because people were in loans that they couldn't afford. People had adjustable rate mortgages. I could go on and on with that. I don't want to get too deep into that because it's a layers and layers of things and reasons why. But the market that we're in now is stable. It's solid. People can afford the houses that they're living in. People are buying investment properties left and right. People have the money to do so, despite what, they say in the media. I see it. I'm getting applications constantly. It is still competitive. There's, the national market, and then there's local markets. So local markets are different. I am licensed in more than one state. So the markets are different in every state. And they're even different depending on the city and the area, which Stefanie, knows. Florida itself, the difference between, say, purchasing in Miami or purchasing in Port St. Lucie or even in parts of Broward County, it varies. But at the end of the day, people are still buying. If you don't own already, I suggest that you do. Property values are only going to continue to appreciate. There's, like I said, no reason for them to decline. I do predict that within the next 6 to 12 months, rates will probably settle in the 5% range, which is a lot more affordable than where they're at now. But you still have the option to buy down your rate. So even if, say, the par rate is a 6.5, you do still have the option to buy down. We discussed, I think, in a previous Zoom, me and Stefanie, we were talking about the 2-to-1 buy down option. So that's still available. There's lenders that are still offering that. The way that works is that's going to involve your realtor on the buyer and seller side. So when your realtor is making an offer, they can ask for a credit, seller credit. That seller credit can be applied to what's called a 2-to-1 buy down. So if the par rate right now is 6.5, and you're doing a 2-to-1 buy down, you're going to go in your first year with a 4.5% rate. Your second year, that rate will adjust to a 5.5%. And then after that 2-year period, it'll go to the 6.5. It'll never increase past that rate. It'll be at that cap rate that you qualified with prior to the buy down. So that's an attractive option for, you still have to be able to qualify at the 6.5% rate, but it's an attractive option for people who they don't feel good about, you know, rates being in the 6% range. And it's funny because rates really aren't high in comparison to our history. You know what I mean? I mean, people talk about, like when I talk to older people, they're like, oh, when I bought my first house in the 80s, my rate was 14%, you know? We got really spoiled with the 3% rates. And I think that people are just like stuck on that. And they think that it's gonna come back. And I'm gonna tell you, it's not. We're probably not gonna see that anytime soon. And the people who waited, so once property values were going up and it was super competitive and people were having bidding wars, a lot of people got exhausted out there shopping and a lot of people gave up. And then a lot of people were listening to the media and they're like, oh, the market's going to crash, blah, blah, blah. So I don't want to purchase right now. I'm going to wait. Those people that waited, they lost so much equity. Like there was so much equity that has been gained since 2021, even, never mind 2020. That's just a whole nother thing. Even just since 2021, when people were kind of slowing up with purchasing, so much equity was to be gained from then till now. So a lot of people lost out. Like I said, properties historically, they always appreciate. In a normal market, they appreciate 3 to 5% a year, you know. Hi, Raquel. How are you? Can you mute, baby? Hi. Hello. Can you guys hear me? Sorry. I can only see her. Oh, hi guys. So where was I? Yeah. So, like I said, there's options, you know, if you're rate sensitive, there is the 2-to-1 buy down option. Then there's also the traditional option to buy down. That's always an option. That's something that, you know, I would discuss with you as a mortgage broker, and could just discuss with you how that works and what those costs look like. You have a good realtor, such as Stefanie, she can present offers to sellers that are attractive while still obtaining things like seller credits to assist with that buy down or to do the 2-to-1 buy down program that I just spoke about. If you just tuned in and you missed the beginning, we are recording it. So we will share that with you after. Just leave us your email address, or if you have like my personal number or my social media, you can message me there and we'll send it to you. Stefanie, can you hear me? Okay, you're on mute, Steph. Do you want to move into the differences between like the condo, single family and townhouse financing?
Yeah, so I wanted to say, yeah, just on that note, of course, you know, right now we're kind of like in a tough spot because we're seeing the higher prices coupled with the higher interest rate. It makes it a little bit harder to get into a house. However, just like Kyla said, I think it's very unlikely that we will see the houses go down in the long term. And if you are, if you're in a place where you need to relocate for work or where you are renting currently and thinking about buying, those like 100% all the time, those are of course always situations where it makes sense to still buy right now. If you are thinking about maybe downsizing, upsizing, there's always like it's like a math equation. You have to see what makes the most sense. But in general, we're not heading into a crash right now. Like Kyla said, there's really no reason for that right now. So, and especially if you are in South Florida, we have a unique situation here. We're getting so many people relocating here every day from California, from New York. Everybody's coming here, and we're building so many new, so much employment is built here. So many new attractions are coming here. So South Florida, especially if you're thinking about like, oh, should I wait till the market crashes to buy here? I don't think that's going to happen.
The market to crash since 2021.
Yeah.
He said it's not going to. There's no reason for it. Property values are stable. They're going to stay the way that they are. The only thing that's going to change is rates will decline. We're definitely going to see that happen. You know, they don't want a market crash, so they want, you know, if our housing market isn't stable, our housing market is to crash, it affects everything in our economy. So it's not something that the government is looking to have happen. They're seeing now that things have slowed up. Things have become less affordable. One of the adjustments that they made to make housing more affordable is the government had reduced the mortgage insurance rates on FHA loans. And FHA loans are actually pricing out a lot less interest rate wise in comparison to conventional. And it's, over 1% difference, so I can price out the same property for the same borrower, and an FHA is going to price out more than 1% below the interest rate on a conventional loan. And then the MI is the mortgage insurance is wildly different. So like, for example, I just priced out a deal yesterday, and the MI for an FHA loan was like $180. On a conventional loan, it was like $360. So that's a huge difference that affects your payment. So I know that in the past, a lot of sellers or seller agents would shy away from FHA offers because there's a lot of false information that goes along with FHA products, which me and Stefanie have covered in previous Zooms that we can share with you guys. But the fact of the matter is, unless there's something wrong with the property, that isn't going to pass an FHA inspection. And an FHA inspection and a conventional inspection are very closely related. And there can be no safety or hazard issues with either one. Often when it comes to FHA, what sellers or seller agents don't like about it is that if the contract is to fall through, that appraisal that's associated with that FHA loan stays with that property for 6 months. So in a market that we're in now, where property values, they're appreciating a little bit slower right now, but when they were rapidly appreciating, seller agents didn't want that FHA appraisal linked to that property, because if that contract fell through and then they get another buyer, that value may have increased, within the next 2 months or so. And that same appraisal is attached to the property with an FHA case number for 6 months. So those are usually the reasons that people shy away from it. Now that the market has changed a bit, and that's not so much of a concern, we're seeing, these seller agents are accepting these offers. I have seller agents, listing agents call me all the time. And they're like, oh, well, is there any way they can go conventional? And I'm like, yeah, they can absolutely go conventional. They absolutely qualify for a conventional loan, but the difference in their payment is like $600 a month. So it's not financially smart for them to even proceed with a conventional loan, whether they qualify for it or not, or they can afford it or not. It doesn't make any sense. The FHA product right now is just much more attractive. The rates are lower, the MI is lower, and we always say, you don't have to marry the rate, date the rate. So you can always finance later on, and then if you do have a situation where I've had some sellers where they're like, no, we absolutely have to go conventional. Like I said, if the rate is an issue, we do have that 2-to-1 buy down option. Inbox me. I can get into more detail about the 2-to-1 buy down option and how that works. You can always buy down a rate. I personally, as a mortgage broker, I give you the best and lowest rate that I can get you that you qualify for. And I disclose what I make. I don't put my compensation in the rate. That's why often I beat out other mortgage brokers. They tend to put their comp inside the rate and they give you a higher rate. I don't work that way. I'm going to give you the best rate that you can get. Obviously, I don't work for free. So that's something that we can get into more detail. Obviously, if you reach out to me, if you're interested in buying, I would love to discuss that with you. We did want to talk about the differences between condo, single family, and townhouse financing. There's a lot to it, so I'll try to simplify it the most. So condos right now, especially in South Florida, are not the most attractive property for people to get into. The number one reason for that being is that the HOA dues are super high. So we had the Surfside collapse so that brought on inspections from the state and the city that they have to get these 40 and 50-year certifications. So with that being said, a lot of these buildings had, deferred maintenance. They're outdated. So they have to make these repairs. Well, in order to make those repairs, they need money, right? So a lot of people's homeowners association dues or HOA dues rapidly increased. The other part of that is due to us being a place that often gets hurricanes. Insurance companies have pulled out a lot in the state of Florida. We have very few insurance companies that will even insure properties in the state of Florida. So all of our insurance policies have gone up, whether you have a single family home or you have a condo association where they have a master insurance policy, all those premiums have gone up. which then also affects your homeowners association dues. So a lot of these condos are just not affordable due to the homeowners association dues, because that's factored into your debt to income ratio when we qualify you. The other factor is that it's just not attractive. You know what I mean? Who wants to pay $1,200 a month to an HOA? You know, nobody does. Some of us have to, some of us do, but you know what I mean? Like, it turns a lot of people away. As far as the financing goes, that can also get a little bit hairy depending on the property. So we have like certain things that have to be met in order to do conventional financing on a condo. There has to be reserves, which a lot of these condos don't have reserves right now because of these increased insurance premiums and because of deferred maintenance. They don't have these reserves. So they have to have 10% reserves of their budget in order for the lender to consider them to have sufficient reserves. A lot of these condos don't anymore. So then they become what's called a non-warrantable condo. And that's a whole different type of financing. I have lenders that will lend on non-warrantable condos, but the structure of the loan is a lot different. It's too much for me to get into here on this Zoom. But there's a lot of red tape, so to speak, when it comes to condos. They're attainable. People buy them every day. I can secure financing on any of them, but there's a lot more to it when it comes to purchasing a condo. As far as single family homes, that's the easiest to jump into. Usually there's no HOA associated with it. It's pretty cut and dry. The only thing that I find with single family homes, if it's not your primary, you're purchasing as an investment, and me and Stefanie have run into this personally, when we're trying to do investment loans, often we use the DSCR product, which I've explained in another Zoom. You can inbox me, I can tell you about it. With that product, we have to look at market rent, and with a single family home, market rent analysis is sometimes difficult to obtain. So that's another topic. But if you're purchasing it as your primary home, that's the easiest to get into. But it's also difficult to find for some people a single family home that's affordable depending on what market you're in. So a lot of people do opt for condos or townhomes because they're cheaper. Now, townhouses would be the second best property to get into. It's easier to get into than a condo because it's treated similar to a single family. It just has that HOA factor, where you have those HOA dues that have to be factored into your debt to income ratio. But as far as the financing goes and how the banks lend on them, the banks lend on townhomes the same as they lend on a single family home. I think that's it. I think I covered that.
Yeah. So one thing that I wanted to touch on, you're definitely 100% right with the condos. It's really hard. The only thing that I see a lot is what we also ran into, it's kind of like the same, goes in the same breath as the issues that we're having with the condos. Lately they're passing new laws with the insurance that there has to be 3 years left of life on the roof. So that's kind of an issue that we see here a lot. So that would be like one of the only things that could happen to you when you're trying to get a loan approved.
Right. Sorry, not to cut you off, Steph. We have something that's called life expectancy on a roof. So that's something Stephanie's experienced that with her own properties. That's something that the insurance companies look at. So whenever you're purchasing a property, you're going to get an inspection done. You're going to get a 4-point wind mitigation inspection. And they're going to look at the roof. That's one of the main things they look at. They used to allow 7 years. Now it's been lowered to 3. Is that correct, Stefanie? 3 years life expectancy on the roof?
Yes. So it's 3 years in general. I think that can even change, but like a good rule of thumb is 3 years. And there's certain ways that, there's certain rules that inspectors use. I think there's you can't have more than 3 patches, I believe, on the roof, and definitely no active leaks. And that would then be considered obviously less than 3 years life left on the roof. So if you were to want to still get that property, you would have to have the seller fix it, or you would have to get it with hard money and then refinance. But that's usually not an option if you're buying as a personal residence. That's more of an investor strategy.
And usually the listing agent knows these things ahead of time. So they usually know how to list the property, and they know who their buyer is. They know who they can and can't sell to the easiest, so to speak. The other factor that you want to consider when you're looking at property would be the windows, because that's a big factor. Yeah. If windows are not up to date or they're not hurricane proof, that's going to affect your insurance premium. For those of you that are on here that are located in the Northeast, It's not as big of a deal when you're here down in South Florida. It is a big deal when obtaining insurance. It really affects your premium like significantly. So those are two things that you really want to look at when you're looking at property, is the condition of the roof and the age of the windows, or the condition of the windows, and if they pass a wind mitigation inspection, because that's going to affect your premium in a big way, which also then in turn affects your debt to income ratio.
Yeah, so that's a big thing. We just had an inspection done for one of the properties that we're doing a refinance on, and we had redone all the windows except for one window. And so it doesn't matter if all the windows are redone, but one tiny bathroom window wasn't redone, but we were able to avoid it by just putting the shutters on there. So that's also a way that now we're going to be able to get the full discount for that.
So kind of before we like run out of time, I do want to kind of tell people, like, you know, people who haven't purchased yet are looking to purchase. A lot of people are like, where do I begin? Like, how do I start? So I did want to touch on that. You know, if you're interested in buying, if you have questions about buying, reach out to me, reach out to Stefanie. I would personally guide you on what steps you need to take to purchase. I'll look at your credit. I'll discuss with you, you know, your income, whether you're self-employed or your W-2, whatever the case may be. There's a lot of programs that are available. So it's not just like W-2 tax return. We do have bank statement programs. We even have, you know, CPA letter programs. Now, when it comes to these alternative documentation programs, those loan products do come at higher interest rates. So you obviously want to qualify what we call full doc or full documentation if you're able. So that would be, you know, either 2 years tax returns if you're self-employed. In some cases, you can qualify with 1 year tax return. That's something I would get into with you if we were to have a consultation. And then obviously, if you work for somebody, a company, you're going to want to have your pay stubs and your W-2s. That's the best route to go as far as, you know, what kind of rates you're going to get and pricing and things like that, and your down payment and all of that. But if you have to go alternative documentation, which a lot of self-employed people do, because a lot of self-employed people don't want to pay Uncle Sam, so they don't show their money. I'm one of them. So you have to do alternative documentation, such as a bank statement program, a P&L program. And then, you know, on that, this is strictly talking on the primary side. Investment, that's a whole nother thing. We did that other Zooms. We can touch on that as well if there's people on here that are looking to buy investment property. As far as credit goes, a lot of people think that they don't have the credit to buy. Often you kind of get both. I get people who think their credit's way higher than it is, and then I get people that think their credit's way lower than it is. One thing I do want to tell you, everybody has Credit Karma and, you know, the Experian Boost apps. Those are called your Vantage scores. They're different than your FICO score. And a FICO score is, it's graded different. You can Google it. You can Google the difference between FICO and Vantage scores. When it comes to mortgage or banking, any banking, we use what's called FICO scores, and it's just a different grading system, and how Experian, TransUnion, and Equifax score you. So a lot of people try to send me screenshots or their apps of their score, and I'm like, that's great. Okay, it gives me an idea, ballpark, but then I go and pull your credit and it's something different. So I can always do a soft inquiry. Soft pull on your credit won't give you a hard inquiry, won't affect your score. See where you're at, see if you have things to clean up. Some people have student loans, and I know a lot of these student loans are deferred. That's a whole nother avenue that we would need to discuss. And these are things that you want to take the steps and have somebody like me look at what you have going on, rather than just assume you don't qualify or assume that you know what your plan is. Like, I have people that are like, well, I want to pay off my debt and I want to do this and that, and I want to get my score a little higher. And the fact of the matter is, like, they don't even know what they're supposed to be paying. Like, I can literally pull your credit and do what's called a credit simulator, and I can tell you what to pay down or what to pay off, or if you should open another trade line. I can tell you those things, and I can tell you exactly how that's going to boost your score within the next 30 days. And then that way you're headed in a direction that you're supposed to. I've seen people not listen to me and go and pay off thousands of dollars in debt, and it didn't make much of a difference in their score. And this is another thing, is that there's tiers when it comes to your credit score. And these tiers, and when it comes to pricing with the lender, that's the tiers that you need to fit in. So for example, if you have a 620 or a 640, you're pretty much going to price out exactly the same. So sometimes the options that you have to increase your credit score isn't enough to really make that much of a difference in your interest rate. So you're sitting there waiting to try to get to a certain credit score that really isn't going to make that much of a difference in your pricing. So you want to know, like, if you want to entertain that and you're like, I want to have, like, a 700 credit score, great, fine. You should want that anyway. But at the end of the day, don't let it be something that's going to hold you back from purchasing, because it might not make sense when we actually look at the numbers. But that's something that we have to get into, individually. Every transaction, I always say this, is like a fingerprint. Nobody fits in the same box. Everyone's needs and everyone's, what their goals are different, and what makes sense for one person might not make sense for another person. You can go as low as 550 on a credit score. I wouldn't advise it. It's not the prettiest of, rates. And you're limited to the lenders that I can put you with. So, I always tell people have at least a 620. That's when you kind of can play ball with these lenders and you have more options. You want to have at least a 620. If you're aiming to be over 700, great. That's perfect. But don't let what you think your credit score is stand in the way of you moving forward. Have a conversation with me. I'll do a soft pull on your credit report. I'll see where you're at. I'll tell you what you need to do to get to your highest score possible. And then, if you have things in your credit report that need to be taken care of or that are an issue, I can discuss that with you. If you have issues when it comes to the structure of your income, like I have a girl that I'm working with right now. She's a nurse. She does like traveling, and then she also works out of a place. So she has both jobs that she's been at for over a year. And then the structure of her income, and now she's getting a raise in October. There's all these different factors and all these different things. And we're trying to increase her buying power so she can buy the most property that she wants, because she's looking to buy a multi-unit. This is up north. And she wants to have, the most buying power that she can to get a property that she really likes, because she's going to live in one of the units. So there's all these different things that we need to analyze, and it's a case by case basis, and every individual is different. So don't make assumptions and don't be afraid to ask questions. There's no stupid questions. Nobody besides somebody who works in the business knows the answers. And I learn new things all the time, and every lender lends different. There's obviously, we have our guidelines and set things that we follow. But there are different things called overlays that certain lenders allow. We do have different creative financing. We do have what's called portfolio lenders, who a lot of these lenders, what they do is when they give you a mortgage, they end up selling your mortgage on the secondary market to another bank, another investor. And then we have what's called portfolio lenders, and they keep the loans. They're the ones that fund the loans. They have their own funds to fund these loans. They don't sell them. So they can be a little more creative or a little more lenient on certain things, or they might let you use different sources of income combined together that on a traditional mortgage you can't. There's so many loan products out there. I personally work with over 80 different lenders. There's so many different loan products. There's so many different options. So if you're interested in purchasing, just come to me. Let's talk. Let's see what you have going on. Let's look at your credit. Let's look at your income. Let's discuss what your goals are. And then we can come up with a plan to get you moving forward.
So I think somebody asked a question. I have another question to ask you also. Let's ask. Sean asked, does USDA home construction loan have a ratio limit for the land? For example, if I'm approved 500K, how much of that can go towards the actual land?
I don't know the answer to that question. That is a very good question. I've done 2 USDA loans in my career, and the last one I did was quite some time ago. I do have lenders that lend USDA. Actually had a friend of mine, I think she's on here. She inquired about USDA recently. I can definitely get you that information. I can inquire with my lenders who lend on those types of loans and get you that answer, but I personally don't know, unfortunately. Sorry.
Okay, now I have a question that is probably just like just a general question. How much does somebody have to have saved to even think about purchasing a home? I know Kyla and I recently had run into an issue with that when we had somebody who wasn't quite as ready as she thought she was to buy. So besides, so I can answer something before Kyla answers. Besides the down payment, there is something called closing costs. Even if you don't have to pay a down payment, which Kyla's going to get into with you right now in a second with the progress and everything, there will always be closing costs. I believe they're like around 2%. This is what the title company
3 to 5 usually.
3 to 5. Let's say 3 to 5 just to be sure. It's better to be on the safe side. So this is what the title company handles. You know, there's different people that handle transactions. So it's me, the realtor, it's Kyla, the lender, and then there's a title company involved, and they charge fees, but those are not really even fees for them. This is more like taxes and state fees that have to be paid, and those are also costs that you have to factor in. But besides that, I know that everybody always wants to know about how much you have to have for a down payment and what's up with the 0% down programs and all of that. I know somebody probably wants to know the answer to that question.
Okay. So great question. When it comes to closing costs, like Stefanie said, I always say around 3%. I say 3 to 5 because depending on the property, it can be up to 5%. So the costs that are associated, your closing costs are associated with obviously your origination fee that pays the lender. Whether you go through a broker like myself or you go directly through the bank, you're paying someone because somebody is working on your transaction, and we don't work for free. So you have to factor in, you're going to have the origination fee, right? Then you're also going to have your title fees, like Stefanie mentioned. Those title fees can slightly vary from title company to title company. Some title companies might charge more for a settlement fee, like a closing fee, than another one, or whatever the case may be. But most of the fees are associated with the property. They pertain to the property. You're going to have to pay into escrows as well when it comes to your taxes and insurance. So those are funds that are going to be collected at closing. I don't want to get too detailed. I know I'm giving you guys a lot of information, but when it comes to taxes and insurance, they will collect your annual premium at closing. So you have to factor that into your closing costs. And then you're going to have to, they're going to have to collect some of your taxes depending on what time of year you close. They will collect a certain amount of months of the property taxes. And then state of Florida has what's called transfer taxes. Every time title's transferred, that's another fee. I know Massachusetts does not have transfer taxes. That's on the seller side. But those are all things that we would go over with you on a loan estimate. But to sum it up, you're going to have your down payment, right? And there's also programs that are no down payment. So minimum down payment, they do have a 1% conventional program. But with that 1% program, the minimum on a conventional loan is 3%. There's lenders that allow this 1% down, but the other 2%, they're going to put as like a piggyback second mortgage that you don't have to pay into, but it's going to stay on your title. So when you go to refinance or sell, you're going to have to pay that back. Now, most people don't care because when you go to refinance or sell, you have a bunch of equity. Either you're going to have proceeds from the property or you just have equity in your house and you just pay it off. No big deal. Take it out of your proceeds or take it out of your equity when you refinance, obviously, if it makes sense to do so. So when it comes to that program, that's that. Then there's the conventional 3% down program. There is some income caps regarding that program. Those programs are called Home Ready and Home Possible. If you qualify for that program, that's something I could tell you. You could do as little as 3% down. Standard conventional loan is 5% down. And then you have the FHA loans that everybody knows about. Those are 3.5% down. Then we have FHA 100% financing loans, which a lot of people are like, hey, I want that. No down payment. I only have to, cover the closing costs. The thing with those are that they come with higher interest rates. So you have to always remember there's no free lunch. Like nobody's giving you anything for free, but some of these things that you can utilize can help you to get into a property, like if you have an issue where you don't have the capital, and a lot of people don't, you know what I mean? And you need the help to get into that property, by all means, utilize these tools. And those are things that I would structure with you. I would look at your whole scenario. I will look at what you have going on for savings, and things of that nature. And where when you're looking to purchase and where you're going to be at and all of that. And I can guide you and let you know what your options are. Okay, we could do it this way. We could do it that way. If we do it this way, this is, here's the con to that. You know what I mean? I will tell you how these programs work. And let you know, like, okay, this is going to be a second mortgage that you're going to have to pay at some point, even though if you don't pay it right now, you're going to have to pay it later. Or this is 100% financing. Yes, they're going to cover your down payment. However, you're going to pay higher interest. Because you have no skin in the game with this lender, they're going to try to take as much interest as they can. And usually with those 100% financing programs, what I've seen, the rates are about 2% higher than the normal par rate. So if you have the capital, if you have the money, definitely use your own capital. But if you do need assistance, when it comes to down payment, there's so many programs that are out there. There's also county programs. I don't particularly love them because they have a lot of red tape. Sometimes they direct you to certain neighborhoods, that they're trying to build up. That's the only place you can buy. They do cap your purchase price. There are income caps. There's all these different guidelines. So it's just a lot of red tape. And then they usually take longer to close, 45 to 60 days, depending on what county you're dealing with, because some of those people are like a blast to work with. But those funds are available to you. They did just have Hometown Heroes in Florida. If you missed out on that, so sorry, because that program was amazing and there wasn't a lot of red tape. They actually, I came to find, and Stefanie, I don't know if you know this, they're gonna release that program annually. So next year they're supposed to release funds again. So what they're trying to do is make affordable housing, possible for people who, need help with down payment. And a lot of people do, a lot of people may be able to afford their monthly mortgage payments, but they don't have the savings to do so. So that Hometown Heroes program is amazing because they will give you up to $35,000 towards your down payment and closing costs. But there's different grant programs. There's so many different options to help you get the capital that you need to purchase. There's also, which Stefanie knows, as a realtor, you can make offers asking for seller credits. You can also get inspections done on your property. Well, you should always get an inspection done on your property. And when that inspection report comes back, and there's items on there that need to be remedied, you can always have your realtor negotiate with the listing agent and the seller, like, hey, there's X, Y, and Z that needs to be corrected. Can you give us a credit of X? Say they give you a $5,000 credit, that's $5,000 off of your bottom line at closing. So there's a lot of different ways to structure to make it happen for you. I know it's a lot of information, and I even have so much more, believe it or not. But I just want you guys to know that if you're interested in buying, don't hesitate. Don't be afraid to take the steps and take the steps so that you know what direction you need to go so you can actually reach that goal. If you just sit in your own head and you don't take the steps or get the right information, then you're not ever really going to move forward. So don't assume that you know what you're doing and you know how to get to where you want to be, because there's a lot of factors that you might not be aware of. And then there's a lot of great things that you might not be aware of that could help move things along faster for you, or, ease your worries. So like I said, reach out to me. I would love to discuss with you, your own personal goals and see where you're at and look at your situation and get you moving forward. Does anybody else have questions?
Awesome. That was really, really good information. Thank you, Kyla. Yeah, let us know, anybody who's still on here, if you guys have questions. I put our emails in the chat. I don't know if, Kyla, if you want to put your phone number in the chat also, or if you prefer that they reach out to you in email. And yeah, I think that we're...
How do I access this chat, or can you put it in there for me?
Yeah, hold on. Let me put it for you right now, because you did really well. I feel like this is a great one that I'm definitely going to be sending to people who weren't able to make it. So Kyla, what's your phone number?
305-748.
748?
Yep.
Yes.
0425.
0425?
Yep. 305-748-0425. And then my email is Kyla at Amethyst Mortgage.
And I know that one.
That message came in. I think he said he was late. No worries. We're going to, we recorded it, so we can send you the recording. So just message me and I'll get it over to you. I think Yitzi had a question.
Yeah, you had a question for Hometown Heroes. Is there a cap amount of the home price? I believe it was like that, the high amount that you said, the 35,000, but correct me if I'm wrong, you know better than me. It was like around the 800,000 mark.
Is the cap on the cash to close. As far as purchase price, There's not a cap, but Yitzi, there is a loan limit when it comes to conventional and FHA loans. And those Hometown Heroes loans, they only apply to conventional and FHA loans. So whatever your purchase price is, minus your down payment, would be your loan amount. The loan limits change every year. So right now they change every year, and they're also different for each county and different states. So what you're going to want to do is you want to Google FHA loan limits, Florida or Miami-Dade or Broward County or wherever, you're interested in purchasing. And then you can see what your loan limit is, and it'll give you an idea of where you need to be at for purchase price. Because if you're over that loan, say you purchase at a way higher price than what the loan limits allow, you have to make up that difference in cash that you bring to the table, because they can these FHA and conventional loan programs only go so high. Then they also change depending on how many units the property is. So if the property's 2 units or 3 units or 4 units, the loan limit increases. So just Google FHA loan limits with the county or the state that you're looking for. And then you can also do the same for conventional. So there's no actual cap as far as the Hometown Heroes program goes, but there is a cap as far as the conventional and FHA loan products. I hope that made sense.
Yeah, I
Okay.
think Yitzi was asking specifically about Hometown Heroes.
Okay,
I think Hometown Heroes was around the 800, but they're already done with that for now, at least.
Yeah, so the Hometown Heroes program probably won't come out again until next summer. And this past July, when it came out, would it come out July 1st? I think it was, or June 1st. They had $100 million to help people purchase property. And it was funny. They said, we predicted it'll last about 6 months. And I looked at my partner and I said, I give it 2-3 tops. And it was done in 2 months. Everybody was utilizing that program, and it's a really great program. So if you're looking to buy like a $700,000-$800,000 property, it depends on how many units it is. It's going to depend on what your loan limit is. But message me and you will talk, and I'll actually run some real numbers for you to give you an idea.
Awesome. Thank you so much, Kyla. I hope that was really, oh my God, it's storming so badly here right now. That's why I had to keep muting myself. All right. So thank you so much, Kyla. I hope everybody found this really informative. I will be uploading this shortly on YouTube because this one was a really good one. And I will send everybody the link also who wants to, and reach out to us if you need anything from us. So have a great night, everybody. And thank you for coming.
Guys, have a good night. Talk soon.
All right. Bye-bye.